Hello, everyone. My name is Rufas Kamau, markets analyst at FX Pesa, and welcome to the second episode of the Markets at a Glance series. So today we will be focusing on what's happening in the markets today, trying to understand the major news and major market movements, and hopefully we are able to narrow down and understand the potential trading setups. So if you have any questions arising from the presentation, feel free to type in the live comment section, and I'll be responding to those questions right away. So let's get this started. So first things first, the chart that we are looking at is the chart of the USD JPY, one of the most interesting markets in terms of the forex market. So if you look at the daily chart, it's quite very interesting. It's not every single day that you see a currency rising about 44% within a very short period of time. So since the Federal Reserve Bank of the US started tightening, we have seen the US dollar gain strongly against the Japanese yen. So from this particular period here, this is March 2022, that is this year, up to the current price level, you can see that the price is already up 30%. So if you go a step back and you look at the beginning of last year, that is the beginning of 2021, then you'll notice that the currency has already gone way up by over 44%. So these are big things. It's getting very political in Japan, and they are trying to defend their currency. So there was a news earlier today, I believe, in the morning. So try to share this very quickly. The news was present in the Financial Times. So Japan spent about 19.7 billion in last week's intervention to stem the yen's plunge, although the currency is once again trading near levels before the government action was taken. So analysts say the government action was temporarily effective in reducing volatility in the trading of the dollar-yen pair, and the yen's collapse to a fresh 24-year low. So early this morning, they basically decided to intervene again by pumping basically $20 billion into the forex market in order to defend their currency. And it's a very simple process of basically selling the US dollar reserves and using that cash to basically buy more Japanese yen out of the market. So what we experienced early in the day, if you look at the 1 minute chart, just to get a perspective, you can see the intervention print, and this happened along the morning hours. So this was somewhere around 11:59 a.m. So somewhere about 1 minute to midday. So you can see the sharp spike right from this point all the way down to this point took about 2 minutes, and the currency basically dropped by 0.77%, or basically 115 pips. So this was a big spike. So whenever investors see this kind of activity happening in the market, they tend to stay away because these might mean the market going straight for your stop loss. So if you think critically and you think along the lines of, let's say, the traders who have been trading since yesterday, Monday, and they have been pressing their stop loss somewhere below this particular trend line, then they were clearly wiped out when the market spiked all the way down before it went all the way back up and seems now to be taking a new trend since that particular action in the morning. So since this particular action, you can see that the price attempted to go back up and now is insisting on moving back down. So towards the end of the day, I'm expecting the price to at least retest this trend line, and hopefully, if possible, continue moving towards the lower side by breaking this particular trend line here. So a key data point or a key target on the shorting side might be the 148.784 price level. So if the Bank of Japan doesn't continue supporting its currency, then we could see the price bouncing strongly and headed way back, and a very logical target seems to be 150. So a lot of investors in the market are targeting 150. So this could potentially be the next target for USD JPY, especially if the Bank of Japan doesn't come or participate in the market to defend the currency. So a lot of investors are expecting that the currency will continue rising, and if this happens, then it could get to the 150 price level. So that's one of the major news that's happening in the markets right now. So let's look at what else is happening in the markets. So on the oil markets, basically the US decided to pump more oil into the markets in order to basically keep pressure on the lower side. So we're trying to share an article here. So this is from the Energy Ministry in the US, energy.gov. So the US Department of Energy, or DOE, Office of Petroleum Reserves today announced a notice of sale of up to 10 million barrels of crude oil to be delivered from the Strategic Petroleum Reserve, or the SPR, in November 2022. So this notice is of sale. This notice of sale is a part of President Biden's announcement on March 31st, 2022, authorizing the sale of crude oil from the SPR as continued support to help address the significant market supply disruption caused by Putin's war on Ukraine and aid in lowering energy costs for American families. So a very interesting thing to notice. So this was last posted on the 19th of September 2022. So earlier today, they basically announced that further barrels will be pumped into the market. So notice that this was set to expire in November, but now they're adding even more reserves into the market, and this is adding more pressure to the oil markets. So what we saw earlier in the day in the oil markets, I'll try and get to this. So try and open the chart for US oil. So on the announcement that more oil will be pumped into the market, we saw some very strong volatility happening in the markets. This was some time back, about 2 hours ago. So you can see the price action that was happening here. So I'll try and highlight so everyone can see here. So a very strong price action indicating that oil was pumping back to the lower side before getting to the support level and reversing direction. So once the price of oil got to this particular support level here, you'll notice that there was an immediate reversal, went back up, did not maintain the bullish momentum, and went back down. So it seems like there's a lot of pressure to keep the prices of oil down. So since the US started intervening in the markets, we have seen a continued trend towards the lower side. So you can already see this happening, especially in the month of October. So strong pressure to push the oil markets towards the lower side. So we're expecting this to continue up until the US primaries are over. So once the primary elections are done, then perhaps we'll be looking at the US trying to restock the oil that they've been drawing from the strategic oil reserves. And maybe perhaps we'll be seeing oil move in their upwards trajectory. So in this case, by focusing on this particular trend right here, so it's clear that if the market breaks the current price level, then prices around $81.8 per barrel might be very interesting to look at. That is, if oil manages to break this particular support and go towards the lower trend line here. So 81.857 seems like an interesting data. On the reverse side, if oil bounces from here, finds support and continues pushing towards the upper side, remember the OPEC Plus countries are looking to strengthen oil prices. And this is one of the reasons they cut their production by 2 million barrels per day. Then in this case, we could be seeing the price bounce and move back up. And we could be seeing price retest this area here, or around $86.1 per barrel. So a very interesting thing to observe in the markets. So one more thing to focus on is if you are a stock trader, then you should know that there has been a lot of news coming in regarding the stock earnings. So one of the most recent earnings happening today is the earnings for Goldman Sachs. So Goldman shares jump after topping analyst expectations on strong bond trading results. So as you can see, the company said profit fell by 43% to 3.07 billion or $8.25 a share, topping the earnings estimate of $7.69 per share. So at the same time, if you look at revenue, it was also a beat. That is, they performed better than expectations. So revenue came in at 11.98 billion compared to 11.41 billion. So the company said profits fell 43% to 3.07 billion or $8.5 a share, exceeding the 7.69 estimate of analysts surveyed by Refinity. Revenues slipped 12% to 11.98 billion, beating estimates by more than 500 million. Goldman's revenue decline was expected after last year's IPO boom cooled down this year. So shares of the bank rose 2.9% in pre-market trading. So now that the market is open, we're expecting that we could see some strength in Goldman shares. So one of the key things that was a highlight on the earnings call was that the company is doing some form of restructuring. Whenever you hear some form of restructuring, basically means that there is a potential that we could see a lot of employees being fired, just like we saw with Microsoft the other day. So today, we enter the next phase of our growth, introducing realignment of our business. That will enable us to further capitalize on the predominant operating model of the Goldman Sachs. Solomon said, and Solomon is basically the Goldman CEO, David Solomon. So we are confident that our strategic evolution will drive higher, more durable returns and unlock long-term value for shareholders. So it's a very interesting earnings to follow, try to project on where the company is headed. Then from there, it becomes easy to make a decision about this particular stock. So there's a quick question here. How about USD CHF? So the market will keep on rising. Hello, I'm Joseph from Dika. Thank you and welcome, guys. So USD CHF will be the last thing that we'll be checking on today, trying to understand the price action and potentially the direction that the market is taking. So this is a chart of the USD trading against the Swiss franc. And as you can see, there's been quite a lot of volatility today. So very quiet morning before we started seeing a lot of volatility happening during the end of the Asian session. London session, we saw the dollar strengthening against the Swiss franc, a pullback, another strengthening of the dollar before the weakening. But first, let's look at the dollar index. So we know that the dollar index has been a major contributor to majority of the market swings that we've been experiencing in the last couple of days. So quite a very strong movement here towards 114. Dollar index pulls all the way back down to 110, rises for the better part of this month before pulling back. So if you go to the forward chart, then you zoom out, you'll notice that last week there was a lot of mixed performance for the dollar index. Going up and then down, up, and ending the week here. However, if you focus on this week, the dollar index started very weak and has been continuing to move further downwards. Meaning that when you see the dollar index being weak against other currencies, then you're expecting the other currencies to be stronger than the dollar. So by so doing, now if you focus on the USD Swiss franc currency pair here, expecting that the Swiss franc should be strengthening against the dollar. So clearly, you can see that the candlesticks are also almost very similar. So this is the opening of the week. The Swiss franc was very strong, pushing against the dollar. There was a slight bounce here before continuing further down. So moving down to a smaller time frame, which is the 1 hour time frame, then you can clearly see that for some part of the day, the dollar was very strong against the Swiss franc before it erased gains. So I'm expecting some continued movement towards the lower side. And if this happens, then there's a good chance that we'll be hitting the lower trend line here. So if you look at the lower trend line, I'm talking about these. Try and zoom out. And also look at the major support and resistance levels here. This one seems like a major one. You also notice that the resistance here was very major. The market failed to break this level, failed to break again here, failed to break here and here. So potentially, with this in mind, these are the historical price levels. It seems that there is also a very significant price level here. So I'll try and just cement this. Let's remove this and just use a rectangle to highlight the price level here. So a very interesting price level here. So this was acting as resistance, and now it seems to be acting as resistance again. So when the market was going up, it was finding resistance here. So after the market broke the level and went back up, going back down, broke the level, it tested the area, found resistance, and now it seems like the market is trapped between the yellow zone here and the trend line here. So the key thing here is that if the market manages to break through, then there is a potential that it could go back to 1.00493 price level. And this is the previous resistance, this week's high, and also close to last week's high. However, if this doesn't happen, then there's a clear direction that the market could drop to 0.98683. And this price level is basically being informed by this particular swing here, where the market was going up, found resistance, and went back down. So this could be acting as the potential target if the price manages to break towards the lower side. So that's it for today. Hope I've answered your question here. So for pound USD, it's similar. We're expecting some bearish momentum. We don't have a lot of time today. So on other news, we know that there's been a lot of political heat and drama happening in the UK, where Kwasi Kwarteng was being fired, and at the same time, Liz Truss, the new prime minister, was facing a vote of no confidence. But now she's turning back her policies of tax cuts, and this is driving the pound in the right direction. Sort of investors are expecting the pound to start strengthening from this news because it's in line with the Bank of England's policy of continued tightening. So British Prime Minister Liz Truss has appointed Jeremy Hunt to replace Kwasi Kwarteng as Chancellor and reversed a plan to cut corporation tax, scrapping a key part of the economic plan that had sparked market turmoil. So a lot of the negative things we were seeing in the market was as a result of the expansionary tactics that Liz Truss was trying to implement in the economy. Now that she has changed tactic, investors are more confident that the Bank of England will be able to raise interest rates and control the rising inflation that is being currently experienced in the UK. So with this in mind, now we expect the pound to continue strengthening. So if you look at the pound USD pair and how it has been performing, then you'll notice the renewed confidence. So there was renewed confidence early in the morning, but then you are not just trading the pound by itself. It's been traded against the dollar, and clearly the dollar is way stronger. So in this case, you can see the movement here, where the dollar seems to be strengthening against the pound, despite the recent pullback in the last 2 hours. So clearly, if you zoom out, you notice that overall, for the last 4 days, the pound was very strong against the US dollar, and this particular movement will continue. So we had a very, very strong bounce to a multi-year low. So this was a multi-year low. I think the lowest the pound has ever traded against the dollar was 1.03. So after this bounce, you can see that the pound has been quite resilient. The preceding week went up higher before pulling down. Last week started going down and then up. And now it seems like we are bound to challenge our previous high. So if you look at the trend lines, it's clear that the pound is trending towards the upper side. So there was this resistance level here, followed by this, and then this, and then this. So if the pound manages to completely change direction from here, then we might be looking at another price level somewhere along these lines. And you can already see it's almost like in a triangular particular pattern here. So if it manages to pull back down, then potentially we could be looking at this trend right here. But there's a high likelihood that the pound will continue strengthening, so pushing way higher towards the previous high. So a target of 1.14946 is very interesting. And also, if it manages to pull back down, then potentially 1.1153. So you should also know that this is not a recommendation to trade. This is not a suggestion to trade. Markets can be very risky, so it's purely educative to help you understand these key concepts. And once you grab these concepts, then you can practice, and eventually once you feel confident, you can go ahead and make an informed decision to trade in the markets. So thank you very much, guys. Thank you for your time. Thank you for your participation. I hope to see you on the next session, and this will be on Thursday at exactly 8 p.m. when we will be looking at how to trade the pound USD. So make sure that you subscribe to the channel, and also make sure that you register or set a reminder for the Thursday session. So, question from Joseph. One question about our today presentation. How do you rate trading strategy from Michael J. Huddleston called ICT? I would have to respond to this on the next session. So kindly remind me on this. So once I have time, I'll go through it and try and respond from an informed perspective. So thank you very much, guys. See you on the next session.